Asian Paints disappointed the street with the volume growth of just 7% versus the expectation of 8 to 10% growth, but that was on account of the elections as well as monsoons and the change in the product mix, etc. But to decode the way forward, I have with me Mr. Amit Syngle, the CEO and MD at Asian Paints, to talk to us about just that. Hi, Mr. Syngle. Thank you so much for making time and speaking with ET now. That's exactly my first question to you. Of course, in Q1, there was elections, monsoon and other issues that really impacted demand. But are you confident of a double-digit growth in the entire FY24 with respect to volumes?
So overall, as we said that we had a tough quarter. Overall, the demand conditions were not very conducive in terms of what we saw. Especially, I think the months of April and May were affected very strongly because of the elections, heat wave, and some other demand conditions which continued to that extent. However, what we have seen is that in Q1, the month of June was a good recovery. Overall, we saw good demand coming back in June, and we also saw some shoots of rural demand springing back in the month of June overall to that extent. And overall, the volume and value growths for the month of June were good in terms of what we saw. Basis that, we think that as we go into the Q2, given the fact that we have a festive season ahead, we also have now the monsoons which have picked up, which is improving the overall market sentiment to that extent. We also see an uptick with respect to the institutional B2B segment, given the fact that the government projects and other large projects are now on the uptick to that extent. Given all these parameters, I think we are still looking strong from a point of view of Q2 in terms of getting into double digits as far as the volume growth is concerned.
Interesting. You talked about the market sentiment and a bit of an uptick you've seen in June, but July is expected to be impacted by heavy monsoons across the country. Do you expect double-digit growth to come back in July itself, or will it be a bit more fag-ended for the year?
So overall, for the paint industry, what we see is that the Q2 is also a combination of one, catering to the demand, which is there. Also, to some extent, there is a little bit of an increase in terms of stocking, which happens because of the impending festive season, which kind of come in. We are also seeing that from the point of view of Q2, the institutional sales, as I mentioned, and also some part of the industrial sales is something which we see an uptick. Given all these factors, we see that the growth will be spread across the quarter, and it is not just limited to the month of July. And these are the factors which will augur for possibly a good demand coming in the Q2.
I also wanted to get a sense from you with respect to the price hike. So, of course, a few days ago, you had announced a price hike, but that was for the inflation that you saw in Q1. Could you talk to us about the kind of raw material inflation that you're seeing in Q2 so far, and what kind of price hikes expectations should we have for the next few weeks?
So overall, we've had inflation which has come up in the last quarter, which is unprecedented in terms of what was our estimate. It was closer to about 1.8% in terms of what we saw. And we are looking at another prediction of inflation in the Q2 as well, which is supposedly around another 1.5% or so to that extent. So we've already taken a 1% price hike, which is already announced in the market in the month of July. And we are definitely contemplating that if the inflation kind of continues, we would definitely look at further price increases in the coming times.
Would this price hike be then enough to offset the weakness in margins that we saw in this quarter? Because the EBITDA, of course, fell 20% year on year, partly on account of higher base as well, but the gross margins were below estimates. Even the EBITDA margin was a bit lower. Do you think you'll be able to claw that back with this price hike?
See, we've always maintained guidance that our PBDIT margins would remain between the 18 to 20%. And even when the margins were higher, we maintained that that band is something which we kind of adhere to. And even if you look at from a point of view of Q1 performance, overall at a console level, we are closer to about 19% in terms of our PBDIT margins. We feel that as we kind of really tackle the inflation which is coming in, I think the larger area which we are looking up is in terms of improving our overall product mix, looking at overall value growths also coming into that extent, and looking at a higher quantum of institutional sales in the premium products as we kind of go forward. So So I think all these initiatives will go a long way in terms of one, boosting the overall margins. We are also looking at areas like formulation efficiency and looking at better sourcing efficiency so that we are able to kind of get larger margins out of our materials planning as we kind of go ahead. So I think those all initiatives should ensure that we stay within the band as we kind of go forward.
I also wanted to discuss the competition with you, Mr. Single, because this is something we've been discussing for you for the better part of last 18 to 24 months. But I'll be very candid with you here. A lot of analysts are saying that some of the incumbents are living in denial, if I can call it that, that competition is having an impact on the industry, whether it is in terms of the dealers getting better margins from a lot of other new players, to the fact that there has been increased the advertisement and promotional spends. What would you say to that? Are you finally acknowledging that competition is something that you'll have to bear with, or what's your entire prognosis on this competitive intensity in this sector?
See, actually, if you look at all the new players who have come in the market, we see that absolutely they have not made any larger impact in terms of the overall paint market. You must remember that the paint market is overall about 80,000 crores in terms of what we see. And if you see any of the new players coming from their contribution, they are not even 1.5% of the total kind of contribution, which is overall the paint industry. So if you see from that point of view, and we can numerically calculate that none of the new players are able to kind of make a impact as of now in terms of what we see. As we go forward, obviously we will have to see how things pan out. But at the moment, we are very clear that there is a larger general slowdown in the industry overall, which we are seeing. We are not seeing any impact whatsoever from the competition to that extent in terms of the newer players which have come in. And overall, what we have seen is that while there have been larger, lower pricing, larger discounts in the market overall to that extent, it has not really moved the overall numbers to say that they have made an impact to that extent.
Okay, so the entire industry is going through a slowdown and not that competition is eating into your market share. Fair point there. And Mr. Singhal, I'll just wrap up the conversation with one quick question on Neo Bharat. How's that been scaling up, and your other ancillary businesses, kitchen, baths, etc.? Could you give me a quick color in terms of what's the scalability there?
So overall, New Bharat, which was aimed at the bottom of the pyramid segment to kind of really reinvigorate the, the unorganized consumer to kind of really buy into the organized market and really look for a better quality and a better featured paint to that extent, has done extremely well. We see that as a leader, we have kind of expanded the overall market for the entire paint industry. Almost an additional 5,000 crores access in terms of what we see has come into the market. And overall, we have logged in a very strong double-digit value and volume growth, which we have seen in the New Bharat coming into that extent. And going forward, we see that our entire association with our new brand ambassador, Virat Kohli, and our other initiatives in terms of this bottom of the pyramid area is going to kind of galvanize us going forward. As far as home decor is concerned, this quarter saw all the categories, whether it is bath, kitchen, lighting, doors and windows, and all our beautiful home stores, which are now 61 in number, they have seen a very, very good uptick in terms of the overall growth to that extent. So we are still very buoyant about the overall home decor initiative, which kind of really, invigorates the core of our business in terms of going forward as we own homes, as we are going ahead. The industrial business again has been something which is good, especially the auto OE and the auto refinishes business, where overall the value growth is closer to about 6% in terms of what we have seen. The general industrial market has been a little bit slower, but I think on the whole, the industrial business is something which has delivered well.
Interesting. And Mr. Singhal, any budget wish list for the government to spur the mass consumption?
Yeah, so I think we always look forward that possibly the budget is more conducive in terms of looking at invigorating growth. So I think any SOPs from the point of view of infrastructure addition, from the point of view of looking at augmentation of the overall housing and construction in terms of the overall environment, and obviously more money in the hands of the consumer would go a long way in terms of really stirring the demand in a strong way.
Okay, Mr. Single, on that note, we'll let you go. Really appreciate you making time and speaking with ET now.
Thank you. Thank you so much.
If you like this video, then like, share and subscribe to ET Now.